Hey folks, Dan Frio here with your market update for October 9th, 2024. So mortgage rates basically just stayed steady yesterday. Remember I said yesterday at the closing bell, I'm like, well, the closing bell is actually my opening bell when it comes to mortgage rates. So these mortgage rates are the same as they were yesterday. So now what we're trying to unpack is what's the Federal Reserve's next move? Because the stock market, the bond, everything is just hinging upon that. So we're going to go in and today look at what Fed officials are saying, the actual Fed officials, because a lot of them are now in mainstream media telling us, their thoughts. So we're going to go over their thoughts, and it's kind of contradicting to what they just did. That's one. And then the state of the economy. Got some notes down here this time, bud. So we got the state of economy. So if you look at the state of the economy just as a kind of a top-down view, doesn't look so bad. And then we have a portfolio update. We're going to revise our portfolio a little bit. And that portfolio we started creating about a month ago. I'm going to give you an update on that. And we take usually a dive into that on Fridays. I might start actually a live event. If you guys would like a live event, let me know down below, talking about different asset classes. Like, how do you analyze a stock or an ETF? What's a PE ratio and things like that. So if you're interested in doing that, just live events on that only, let me know down below. And I have several friends that are in, Morgan Stanley and things like that. I can see if they can join us. They are kind of strapped a little bit on what they can and can't say. It's a highly regulated industry. So let me know down below if you guys are interested in that. I'll put that together for you. But without further ado, let's get to it. Where are rates going to go today? So the economic data we have for today is basically nothing. We have Fed official talking, crude oil inventory, Fed official talking, and Fed official talking. So they're all talking right now. So what are we expecting to happen with rates? Well, let's get over to here. Right through here, MBSs are down 12. That means mortgage rates are going to tick up a little bit. So we'll probably see 6.65 later this afternoon. But there's an interesting analysis here. I don't completely agree with this guy saying. It's another view. I love other views. That's why I ask people all the time, join me on my live events or in collaborations. Even if you're on the other side of the fence, I'd love to talk this out to see how you're understanding the markets. Maybe a little different than me. I can give you my insight. You can give me your insight, and then we can kind of put all this together and figure out. I'm sure we have compromises somewhere. But without further ado, let's get to this gentleman right here. I think he's with Morgan Stanley. Yeah, he's with Morgan Stanley. He's an analyst there. I want you to hear his take on this. I might pause it a few times and give you when I go like this, these are things to pay attention to because either I spoke about it or we're going to speak about it. So that's what we're going to talk right now. He talks about the national debt, what the heck the Fed's balance sheet's doing right now. But you guys didn't know the Federal Reserve is actually dumping a lot of mortgage-backed securities right now. That is actually causing pressure in that environment, increasing rates. So let's get over to his interview. Then we come back. I'm going to put this all in layman's terms so you guys can understand it. Then we're going to look at the CME FedWatch tool, where rates expected to go after his commentary, and I'm going to show you what many Fed officials are saying, and then on to our portfolio. So let's get to the interview.
Guest says the Fed, because of the big 50 basis point rate cut, is now ahead of the curve, and it's keeping stocks and bonds in their trading ranges. And with global central banks continuing to ease, there's more tailwinds. Let's talk to Brian Weinstein now. He's head of global markets at Morgan Stanley Investment Management. And Brian, let me just cut to the chase here on China, which in some ways is maybe a leading indicator for this whole conversation. Are you a believer in that story or a skeptic?
I've been a believer that China would start to really ease into next year. Obviously, they got ahead of the curve. But I think what you see today is that they're not going to do it all at once. So with the Fed easing, with a lot of other central banks easing, I think China has a longer-term oversupply of housing issue and some other structural issues. They want to ease. They're not going to fire all their bullets at once. But I do think you will see a cyclical China recovery into next year. These 10% daily moves are a little bit harder to figure out what each little piece means. But obviously, China is watching. They're on the ball. They're not going to do it all at once, and they're going to get some tailwinds from the Fed and other central banks.
Yeah, and if you're right about that, it's going to help GDP on the margin, maybe also be a little bit inflationary as well on the margin, which is something to keep an eye on. What are you doing in terms of overall positioning right now? The fact that after they cut rates, the long end has moved higher.
Listen, I've been of the view, as you know, that rates have kind of found their bottom. They're ahead of where they should be. If the 2-10s curve is going to end up at 150 or 200 basis points as per normal, and neutral is somewhere between 3 and 4, when you get 10s down towards 360, it's hard to rally them more. And I think what's really interesting is moving credit spreads. So we backed up a quick 30 basis points, and credit spreads didn't widen. So there's demand for fixed income. There's demand for risk. That is good. It's good for the Fed. It means they can now ease a bit more slowly. I think you'll see tighter credit spreads. I think you will see higher rates, maybe meaningfully higher rates, but it's going to take a little while to work through the demand for fixed income.
Just so you guys know, when he's referencing fixed income, he's talking about bonds. And then when he's talking about equities and other positions, he's talking about stocks. So you got to know the differences because it's a huge difference in investments. So let's get back to it.
So you're not really ruling out that we go, not even that we stay above 4% on the 10-year, we go to 4.5 or 5.
Listen, I think if you ask me for an aggressive range for the next year, I would say that 350, 60, where we saw a week and a half ago. Yeah, I would say you break the old highs. Like, let's make it a wide range. I would say you can get to 5 or even 5.5.
Wow.
If terminal is 4, 5.5 is a very reasonable thing. Listen, what's amazing.
So if he's saying the 10-year Treasury could get to 5.5, well, let's think this through. Normally, mortgage rates are about 150 to 200 basis points higher than that. So could we see rates at 7.5 again? That's basically what he's saying here. And I'm not on his camp, but I at least want you to get another view of what people think of the economy. And this is the confusing part. We have a lot of people like this. We have a lot of people like others. And there's contrarian information all over the board. So that's why we're trying to loop all this in to figure out, or predict or forecast what the Federal Reserve is going to do. So we look at all these numbers to figure that out. So let's get back to it.
Amazing, Kelly, is when 10-year notes got to 5 with the Fed at 5.5, the economy didn't crater. Everyone thought it would. So there's some resilience to this economy. A giant fiscal deficit helps, and I think you'll get some more stimulus once we're through the election. So there's a lot going on, and I don't think the economy ever got as weak as people expected it to, given where the Fed went, and that's important to note.
What is the Fed doing in a 5.5% 10-year scenario? I assume at that point they're not cutting more, although maybe they are. Would they be hiking rates?
Yeah, it's interesting to think about, right? People will say, well, more QE. Listen, I don't think they're going to lose control of rates, but I do think there's still this positive correlation between stocks and bonds. With at the lows in interest rates, we were basically at the highs in equity. I think you can assume at a 5.5 10-year note, if we got there, equities would be lower. It would start to hurt. So the Fed would have to do something or consider expanding their balance sheet again, stop first, maybe you have to stop shrinking it. But it would be interesting, depending on what inflation is doing, if they would ease or tighten. It's hard to say exactly. But
okay, so when he says the Fed is shrinking their balance sheet, here's what he's talking about. Here's what the Federal Reserve did. During the pandemic, they were buying up. Remember I said they were buying up mortgage-backed securities by, I think it was $40 billion a month? And that really caused the prices of bonds to skyrocket, driving down the yields to all-time lows. So this is what the Federal Reserve did. They jumped in, they started buying all kind of bonds, treasuries, and mortgage-backed securities. Now what they've been doing is they've been selling right through here. They've been selling off right through here. So you can see it right through here. Here's their balance sheet, and it was still kind of up there from the last kind of crash that we had, but they were ticking along, adding some things here and there, and then all of a sudden, boom, here's what happened during COVID. So this is what happened. So as they're selling, a lot of people aren't buying mortgage bonds right now because of the risk anyways, and then the Federal Reserve is selling these bonds, causing the price to go down. And what do we know when the price goes down? Well, mortgage rates go up. Okay, so that's what we're seeing right through here. He did mention the deficit. He did mention the Federal Reserve reducing their balance sheet. Here's what he's talking about there. So this, again, is going to put pressure on the prices. Yields are up. So they just want you to understand that part of it. Then we're going to go to Yahoo Finance. Now, everything basically in Yahoo Finance, not everything, but there is so much today about what they're talking about in basically mainstream media about the Fed. So if we go through this analysis right here, could the Fed be cutting rates too quickly? That's one of the comments. I got to put these on because I'm old. You go down through here. Let's see. Diamond is advising both Harris and Trump But who will he back? Not sure there. Mortgage rates surge, leading to a fall in refinances, and I can show you that on the chart right there here soon. What else? The big question hanging over banks is earnings starts. Fed's Logan calls for gradual rate increase. We usually don't see this much on the home screen of any of these channels. Okay, so here's what also in the news right now. What are Fed officials saying? You know, all these Fed officials that keep coming out every day and talking, what are they saying? So I actually went to ChatGPT and said, hey, can you pull the data from any Fed official that talked in the last few days and what they're telling us? Okay, so it's basically right through here. Fed Chairman Powell, decision to cut rates will hinge on improving inflation metrics and the jobs market. Goldsby is a dub. He's always saying that rates should come down. So he's also saying in here, made only if there is clear evidence of inflation is sustainable on a down path. New York Fed John Williams, basically the same thing, suggests a need of patience. So all the Fed officials now are looking at this data saying that 50 basis point cut we did, that might be good for now. Okay, so that's the concern in the markets. Here's what the markets have to look at. So let's look at the overall economy in general, and I know I did this yesterday and the day before. We have the federal funds rate at 4.75 to 5%. Okay, and that'll come into play here in a second. We have inflation. No, it's not at 2%, but it's darn close to 2%. We have a pretty good jobs market. The unemployment rate right through here, you can see right through here, it's in check from history. It's right here at 4.1. You can go back through here, and it's been much higher for years before. And then we have GDP at 3%. And the Atlanta GDP came out yesterday, and it was quoted at 3%. So if you look at the metrics here, it looks pretty good. If I'm an investor, I'm like, okay, I would buy into this market, okay? But you have to know the history of things. So that's that part of it. The CME FedWatch tool, here's where we are. So now there's a 12% chance that they're not going to cut. This was 13 yesterday, so it's teetering about 85-15 is going. So I think they're going to continue to cut because they basically put themselves in that position. Don't know if they need to cut, but we're going to find that from a couple of jobs reports that we come out. And then tomorrow we have the CPI, consumer inflation, and then on Friday we have the producer inflation. So we're going to check those as well because I'm not going to just say, okay, the inflation metrics at this point is done and over with and it's all settled. So I'm still concerned about that as well. The 10-year Treasury and everything, if you look, I look at this every day, it's inverted again. The yield curve inverted, and you'll probably start hearing about that again. So it's when short-term rates are higher than long-term rates. Doesn't make any sense. Like if you were going to invest your money for 3 months, you get a 4.6% return. If you want to put that money to work for you for 10 years, you're thinking, okay, if I'm getting 4% at 3 months, probably get 10% if I want to tie up my money for 10 years. No, you actually only get 4%. So why would you tie up your money longer term? You might want to stagger. If you're investing, I would stagger my money. I would just put some money in here, and as it matures, this one matures, go back on the long end, and as these things mature, just keep reinvesting on the long end, and you will always be churning, and you'll have positions in all these. Just an idea. So now we're making some updates to our portfolio. And I haven't talked about this much. I said I'd be talking about it on Fridays, and I'll dabble it in here every once in a while. So check every day, see if we're going to talk about portfolios. But I'm actually exiting my position in the China trade. We made quick money. And I got out of it the other day, but I haven't updated you guys. So now what I'm going to put that money into is utilities. Okay, utilities are doing awesome this year. Okay, they're a good safe haven because you're getting good yields, and they're actually appreciating right now. So what I did is I went into ChatGPT. Let it do the heavy working. Like if you're looking for a mortgage, let me do your heavy lifting. And I'll explain to you guys what I do at the end of this video because I'm a mortgage loan officer. I'd love to help you. I'm licensed in all 50 states as well as Puerto Rico. So if you're out there needing help on a mortgage, reach out to me. I'd love to help. But through here, I was saying, okay, here's what I want. If you're looking at the utilities spider, they probably have the same components or same stocks in there, most likely. Okay, not necessarily, but probably very close. So I'm like, okay, give me my year-to-date returns, and then what are the expense ratio? So you can just see down through here. Here's all these utility ETFs. So we have the Spider, XLU. We have Vanguard Utility is VPU. These are all ETFs. And what an ETF is a basket of stocks in this environment. Okay, we have iShares US Utilities ETF, and these are the ticker symbols. So if you want to buy these stocks, you want to look them up, you can look them up by the ticker symbol right through here, and that's what's called the ticker symbol. Okay, then you have Fidelity MSCI Utility Index, and then we have the Invesco S&P 500 Equally Weighted Utility Index. And here's the tickers, and then here's the returns. You know, they're all fairly close, between 6 and 7%. And then here's the expense ratio. Look how this one is. It's 12. This one's 10. This one's 0.43. This is 0.08. So this is a fraction of this. So if you're getting almost the same returns, why don't you just use the one with the lowest cost feature? So that's what I'm going to do in this. So what we've done is we added the FUTY into here. So it's right through here, FUTY. It's the Fidelity Utility Index Fund. Okay, it's right through here. So when you get it, here's what we're going to add it to our portfolio. We're going to dump this GXX. I'm not comfortable in investing in China. That's basically the whole thing. I knew there was a stimulus plan. I could make a little bit of money on that pretty quick. I'm just getting in and out of that trade. So I'm going to dump that one, confirm it, and we're going to add in the FUTY. Okay, what is the FUTY? Let's see what's its holdings are in here. So here's what this stock has been doing, or the ETF's been doing. We'll go to year to date. It's up 24% year to date. You can see that right through here. Okay, what holdings does it have? Well, you go down to its holdings, and here's what we have. So we have, and I don't know some of these companies, folks. So we have NextEra, the Southern Company, Duke Energy, Constellation Energy, American. I think you understand it. So that's what you're getting here. The PE ratio is price to book. PE ratio is 0.05. I don't know how that is. That's on an ETF, but I want to see its yield. Are they giving us the yield on this thing? Yes, the yield. The yield on this is 2.67. So even if this stock doesn't move a penny, you're still going to get a 2.67% return. But I think if you're getting a 2.67% return on top of, and let's go back to it, the what it's been doing so far this year. And so far this year, when we looked it up, what did it say? It was up 24% or something like that. Yeah, it is up 24% on the year. And again, guys, this is how people with money are making more money. So if you're considering yourself poor, well, let's get yourself out of that. Okay, start saving a little bit of money every paycheck. $10, $25, $50. Think if you did $50 a paycheck and you're getting, and these returns aren't going to keep doing this. This is ridiculous. Usually when I'm in the markets, I'm looking for a 7-8% return, not 25%, which we've been seeing over the last couple of years. So be cautious when you're doing this. But what I'm trying to at least educate you guys with is understanding the markets. Okay, so that's our whole goal here. So this is our positions that we have right now. We got the FUTY. We have the XLF, which the XLF is a financial ETF. We have Berkshire Hathaway. It's a long-term. This is a long-term position, and you could buy into this and not even worry about it again. Bitcoin is Bitcoin on steroids. Don't buy this. Okay, I just have it in here just to represent. I want you guys to see how volatile Bitcoin is, and the spider. This is the top 500 companies in the United States. So check these out. What I'm asking you to do is nothing. I want you to do research. I don't want you to buy these things. I'm not a financial advisor. I don't do this for a living. I'm just helping you educate you guys in these markets, understanding the assets, understanding equities, understanding the bond markets, all these things. You're not going to know everything about these, but know enough to be dangerous, I guess is my point. So my name is Dan Frio. I'm a mortgage loan officer. We just added, hold on a second. We just added a component to our website. It is right through here. Let me see if I can get my picture in this. I can't get it. Well, here's my picture. Let me just get me out of the way. All right, so I'm going to get me out of the way. If you're looking to refinance, we're going to let you call the rate. Okay, we're calling this a rate watch. So what we're going to do, you can go in here and actually put in your information. And when that rate gets to right where you want it to be, we're going to let you know. We're going to go through the numbers with you, go through the costs, go through everything so you understand how the numbers would work in your refinance. But check us out at therateupdate.com. Here's my website, and you can find all kind of information up here. There's research tools up here, which show you. Let's go to research. Student loan relief, loan programs, loan processes, calculators, rent versus buy, all kind of different calculators here. Loan estimate. We have a loan estimate. What this does, we added this about 6-8 months ago, and it's huge. People that are locked in, they're actually reaching out to us saying, Dan, here's what I'm locked in at. I know you're a broker. So I'll give you a little bit more information about me. I work at ServBank. Okay, ServBank is the number 10 mortgage servicer in the entire country. But working at ServBank, I'm licensed all over the country as well as Puerto Rico. So no matter where you live, I can help you. So if you're locked in and now you're like, hey, Dan, can somebody do better? But we need at least 21 days or more before you're closing. Okay, so send us your loan estimate. Let me review it. I'll send you a video back and tell you here's what we could do. Okay, so that's a tool we have for you. And then the grant finder right there here. If you're looking to buy that first house, or maybe, just check out the grant finder. It's free money, basically free money to help you with the down payment and your closing costs. So we have national grants here as well as the Chicagoland grants. Or you can just go right through the Apply Now button. If you're looking to buy, refinance, maybe looking at a reverse mortgage, buying that first investment property, you can hit the Apply Now button. What most people are doing so they can get somebody on the horn and ask questions is they call us. So if you scroll down to the bottom of the website, you're going to find that information right through here. So you can call us at 844-775-5626, or you can reach me at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic afternoon. I'll be back here later today for the closing bell to let you know how all this mess ended for the day. Thanks for watching. See you later.